and welcome to The Annuity Show. I'm your host for today, Betsy Hume, and I am so excited to be joined by my favorite annuity specialist. I have Ms. Elise Roberts with me here today. How are you, Elise?
I'm doing well, and it's so nice to see you, as usual.
I always love seeing you, and I'm so excited to have you on the show today because I know you are a wealth of information when it comes to annuities. So I want to jump right in because I want to get as much of that info out of you as possible while I have you here. But let's just start with the basics. If you at home are like me and you don't really know very much at all about annuities, I want to start with the very, very basics. So what is an annuity?
The best way I can describe an annuity is it's just a simple financial tool that allows you to build a lifetime of income. They're used for many reasons, but the main reason is a lifetime of income that you can never outlive, even when the money runs out. And so annuities have, there's all kinds of, and we'll talk about over several episodes, but there's many types and they work different ways. But in general, it's like having a pension. And some people don't have one. So this is a great way to create your own pension. And some people do have one. And that's a great way for them to supplement the one they have that doesn't pay for everything. So if they're trying to just create another leg of income that they can't outlive. So that's really the basics of an annuity.
I love that. And I think that's a really interesting way to put it because from what I understand, pensions are increasingly rare. They used to be very commonplace. And from what I hear, a lot of jobs these days are not offering pensions. So I think it's important for people to have another source of income, like you said, that they can't outlive.
Right. And what happens today, like back in the 70s, they came out with the 401k and all the different retirement plans at your job, which took away, and they got away from the pensions. And they did that to take the burden off the company. So they shifted the burden to the person.
Right.
So now as the employee, the consumer, that person is in charge. It's not like someone gave them this. This money in a 401k, 403b, 457, all of the different plans at work. Any numbers or letters, that's just a government code for you've never paid tax on this money. So they've taken it out of their own paycheck, put it aside, and so that's their money they struggled and sacrificed every week not to use, to put aside for the future. And they can leave it in there and live on it, but the risk there is it's not guaranteed to last forever until they move it to an annuity.
Right.
So most people do at some point transition that money to an annuity.
Yeah. So you said it's a financial tool or a financial product. Let me ask you this. How does an annuity differ from another financial product like a stock or a bond?
So with stocks and bonds, and I've spent many years in the industry, so I've been on both sides of this fence. So I love that. I have that experience. So stocks and bonds, mutual funds, they have, unless it's a retirement account, if it's just regular money, you're taxed on your gains as you go through the years. Okay, so every year, whatever your gain is, you're going to do your taxes, and then the gain you're taxed on. Okay,
I see.
So, and there's some things that they're not, but for the general part, any money not in a qualified plan is taxable annually. So, and then again, there's all kinds of different accounts and products, and some are tax deferred. But that's the number one thing about an annuity is all the money of any type is tax deferred during the time you don't use the money or spend it. So every year you continue to grow the money, you're building the money tax sheltered. Okay, so unless it's like, and we'll get into this later, but unless it's like a Roth, it's tax sheltered, and when you spend the money and you start taking those paychecks, that's when you pay the tax. Okay, and you're only taxed on the amount you take out. So some of the differences are basically you pay a fee to have the other programs because you have an advisor usually helping you. So there's a cost there. A lot of annuities, and using those as a financial retirement tool, a lot of times they don't have cost. Some do, but a lot of times they don't. And you never pay the agent or an agent advisor because that's not a cost. They could charge you that if they are, if they do stocks, bonds, and mutual funds and offer you annuity, then you might be paying extra to have that annuity with that person. And it works, everyone's different. So someone might have an advisor that doesn't charge that piece. But what I've found is the cost is usually on everything in the account, and annuities are part of that account. So a lot of times you'll actually pay a fee not to have the money just in an annuity with someone outside of that other money.
I see. So I heard you mention it just now, and I have had this association too. Can you explain why annuities are often associated with retirement planning?
Number one reason, what I just said, lifetime of income.
Yeah.
When you retire, what is the one thing that you're going to do? You've gotten older. What's the one thing that happens as we age? What do we have less of? Time to make up a loss.
Yeah.
So it's really nice to have money where in different types of annuities offer that protection. But it's nice to have the money also where you're not paying tax on the money as it's growing, and you're guaranteeing that income.
Yeah.
And many annuities offer you the income immediately. So you
Really?
retire and you've got this big 401k and you want to go ahead and start living on it. There are annuities out there that allow you to do that right away. It's immediate
wow.
income, which is 30 days.
Wow, I didn't realize that it could be that fast. I think that's maybe another misconception about annuities is that you put it
You have
away.
to wait.
Yeah,
Right.
yeah.
And many you do.
Okay.
Many you can only take, well, most you can just take some withdrawals. The difference between taking a withdrawal and doing income is withdrawals are depleting the money and there's no guarantee that you'll keep having that withdrawal. However, with an annuity that has a lifetime of income, you can take that income check knowing, even though it's a withdrawal, it's called income. And when you turn that income on, it's guaranteed never to run out.
Wow.
It's amazing. They're really awesome programs. And again, they're different for everyone. There's a lot to learn. We're just getting started. I love the idea, and I love that creating the annuity show gives me the opportunity to educate.
Yes. That's what
That's
I
what-
was just going to say, because it's such a complicated field of the financial industry. And I think that a lot of people associate annuities with maybe the annuities from a few decades ago, which were much more basic and much more restrictive from what I understand.
They were
from you.
totally different.
Right.
I will tell you this. These aren't grandma's annuities. It's one of my favorite things to share.
Yeah.
They're not. And everything you've ever learned about an annuity, clear the mechanism, because there's about to be an amazing education that's happening here right on this show.
Yeah.
And we're going to help people understand the differences in those other annuities from years ago and today. And as little as 5 years ago, the annuity world shifted. And 3 years ago, it shifted again, majorly shifted. So if someone has an annuity that's 3 years old or older, they should look at some of these that are out today, because what has happened is the interest rate environment has changed, which changed annuities.
Yeah.
So it changes everything, but again, it changes annuities also. So if someone has one that's not, and some people have them that they've had and they've been living on the income forever and the money's gone. And those are beautiful. I love seeing those because I know that person's getting money well beyond what they could have ever imagined that they put in or that they had gained. So and they're still getting their checks, so.
Well, we do have to take a quick commercial break, unfortunately.
I know.
I love talking with you. Before we do, I want to encourage you, if you are curious about how an annuity might fit into your financial portfolio, give Elise a call today. You can reach her at 888-526-4184 and tap into her incredible wealth of expertise and experience with annuities. But whatever you do, don't go away. We'll be right back on The Annuity Show.